who said AMC was never going to recover in the comment sections of these videos over the past couple of weeks, because if I'm not blind here, it looks like AMC is up about 7% for the day, a very explosive day. Now, some of you bears out there might not like to hear this, but this is probably the start of another major rally, and I want to go over my thesis for that, because I'm not afraid of being wrong. I've been wrong many times, but I don't think I'm wrong here in this situation. So I want to go over this whole Fed meeting, why I'm so bullish, what the news is, a possible ceasefire coming or peace agreement between Russia and Ukraine, and what that would do for the markets. Mix a positive Fed reaction as well as a ceasefire, and you could be setting up for some massive moves. But regardless of that, if we get one or the other, AMC is at a very important level, approaching $15 per share. That is important on the put side as well as on the call side. So we're going to take a look at the option chain, and I want to express to you guys how important that level is. So we have a lot to get into. I don't want to waste time going over everything here in the intro. Hit the like button and subscribe to the channel if you guys have not already. Get yourself those free stocks. Links down below in the description. Get a huge return just by signing up for Moomoo and depositing $1. Get 3 free stocks as well as an additional free share of NEO upon your $1 deposit clearing. Like I said in the last video, less than a Snicker bar. Get yourself a ton of free stocks. But let's get into this video. If you guys want to join the trading community as well, link down below in the pinned comment, and come join us on the live streams later on tonight, 10 p.m. to 11 p.m. Eastern Standard Time every single day. But AMC did close up 6.86%, up over 8%. Right here, we did hit 1469, came back down just a little bit. We are climbing in after hours, up about 0.5%. So all in all, we're over $14.50 per share, and that's going to be very important once we do get into that. But I first off want to go over the news that has came out today. A lot of back and forth news, to be honest with you guys, but some of the bigger things that I do want to point out is this. I'm not even going to try to say that, to be honest with you guys. This person, one of the representatives of Ukraine at Russian-Ukraine negotiations, says, quote, "There are fundamental contradictions, but there is certainly room for compromise. We'll continue tomorrow a very difficult and vicious negotiation process. There are fundamental contradictions, but there is certainly room for compromise. During the break, work in subgroups will be continued." So that is a great sign. It's not a ceasefire, it's not a end of war agreement, but it steps in the right direction. You also did have the Kremlin come out and say that Kyiv, or just Ukraine in general, really didn't want to negotiate as much. So I don't know what that deal is, but it definitely looks more positive than bearish, and that is partly why the markets did rally. Now, if this conflict does come to an end, if there is even a ceasefire that's not just humanitarian quarters, I mean, imagine the last one you just had, that 12-hour ceasefire, which fell through. The NASDAQ closed up 3.5%. Imagine what happens when the war is over. The markets are going to rally, something that you have never seen before. And if that happens sooner rather than later, that will be a very good thing. If that could happen this week, you don't even want to know what'll happen to your, well, you do want to know what'll happen to your portfolios, because they will skyrocket. But even on top of that, the Fed's going to be very important, and that's really what the markets care about as well. But here's a very good sign. I want to point this out to you guys. MOC imbalance. That means market on close. Imbalance, 4.3 billion to the buy side. That is massive. You never see over $2 billion to either side. The buy side or the sell side, rarely do you see these kind of numbers. So to see 4.3 billion to the buy side the day before the Fed is a very, very good sign. I think the markets really overshot to the downside as far as fear expectations for this Fed meeting, for this Fed announcement. As long as nothing else that we have not already known about comes out, the markets will rally. If the Fed comes out, raise rates 0.25%, if they come out and say, hey, inflation's going to be high, growth might slow down, things that we already know that still sound bad, but we know these things, the markets will rally. The only way the markets will fall is if the Fed dramatically slashes their growth estimates. If they come out and say, hey, we might be facing a recession here in the second half of the year, then markets would probably fall on that. If the Fed comes out and raises rates 0.5%, markets would fall on that. If the Fed comes out and says, yeah, we expect inflation to last years, markets would fall on that. Anything less than that, and the markets are going to rally. You mix in this somewhat bullish sentiment with Ukraine, and if we possibly, I'm not going to put too much hope on this, but if we can possibly get some kind of ceasefire by the end of this week, mix those two catalysts together, and AMC might just go through a mini squeeze here. I'm not going to hold my breath. I'm not making any options trades based off of that. It's better to be late than wrong, but it is certainly a very real possibility, especially if you know how the option chain looks. This is the most bullish option chain that we have ever seen. Hands down, the most bullish. And let's look at that. So if we're looking at the option chain, 5,500 calls that are in the money, 400,000 that are out of the money. So slightly over 1% of the total calls are in the money. That's a very, very small amount. Same thing on the put side. You have over double the amount of puts that are in the money compared to out of the money. And let me just remind you guys, when puts go into the money, the market makers, they control 90% of the back end of options typically, because there's not always somebody like me or you willing to sell a put or sell a call. So the market makers have to come in and do that. Well, when they start to lose selling 125,000 puts, they have to come in and short the stock to make sure they don't lose money, because they have an obligation to give you stock at a certain price. Well, same thing to the call side. Just flip what I just said to the call side as well. So that's why the puts are very important as well. And that's why this expiration is very different in particular. You have not seen these kind of levels of puts that are in the money from recent memory. I can't think of one time where you've seen this many puts that are in the money, or even relative to the amount of puts that are out of the money. And certainly on the call side that applies. But if you actually look at the option chain here, yeah, AMC up 0.5% here and after hours still. Looking really good. But if you look at AMC's options chain, we've went over this many times, and we will again on the Ortex data and the option flow sediment. $15 is that key level. So very important. So very important. On the call side, 15,000 for open interest. On the put side, 31,000 for open interest. That means if tomorrow, Thursday, or Friday, AMC stock goes over $15, then you will see 1.5 million shares bought on the call side, and you will see 3.1 million shares bought on the put side. So that's almost, by the time tomorrow rolls around and this stuff updates all the way, probably going to be looking at about 5 million shares around that would have to be bought if the stock can make its move above $15 per share. And we're very close to that right now. So this is really a key testament. Are we going to break out? If we break out above 15, then we could fly. If you look at the call side, at 1550, 10,000 for open interest, 13,000, 4,000, 11,000, and then it drops off a little bit, 7,300, 6,000, 17,000 for open interest at the $20 strike. Same thing on the put side, 2,100 puts at the 1550, 1,400 or 14,000 puts at the $16 strike, and then a couple thousand, and then you do have about 7,000 at the 18, and then about 5,200 at the 20. So a majority of this actual de-hedging from the puts that are in the money right now, if you look again at the Stonko tracker data, 125,000, a vast majority of this is held at the $15 strike, 31,000 out of 125,000. So a vast majority held at the $15 strike. If we can break above 15, then you have room to massively rally on top of everybody else that is sold out of the stock that would see that rally and would FOMO back into the stock. The beautiful thing about AMC is even if you get out of this trade, you still know the trade, and deep down you still think there is at least a possibility of seeing the MOAS. That will always keep a certain degree of FOMO around in everybody's minds that even walked away from AMC. So when you start to see these rallies, they can be much bigger because of this relative to a different stock that rallied once and just went away. You know, there's not a whole story around the stock like you do have with AMC. So I'm very excited as far as that is concerned. And I don't think with the current market conditions, the Fed is going to come out and put us into a recession. If the Fed raises rates 7 times like the markets are pricing in, back to back with Russia in shambles, China on the verge of having their economy in shambles. It's much worse actually than we know. China gives us numbers that you just can't believe. They won't even let us audit companies that are listed in China, that are in China that are listed on the American markets. Chinese ADRs are literally about to get removed from the markets because of it. But that's a topic for another video. A lot of shady shit happens in China. Situation in China, not good. Russia, not good. Europe, not good. America, that's arguable. It's better than other countries, but it's still probably not the best. Given, look what the hedge funds have been doing. Goldman Sachs, selling Russian debt to hedge funds. That can't be a good proposition. But, add all of that together, plus inflation that the Fed cannot control. The Fed knows by raising interest rates, they're not going to be able to get supply-constrained inflation down, energy inflation down, or any external inflation to come down. Not going to happen. You're just going to hurt the economy for no reason. So they have to raise rates. They have to show investors they will rein in on inflation, but it's not going to help the broad picture. So why put your economy into a recession? Why put the world into a recession at that point? I don't think it's going to happen. That's why I have a lot of call exposure for tomorrow, and I did heading into today, and we made some good money in the trading community. Link down below in the pinned comment. I think a lot of people were too bearish for today, and that's partly why the markets did rally. When you have a lot of bearishness, when you have the put to call ratio at all-time high levels, you will tend to see very ferocious rallies because people freak out, they're over leveraged, and they want to de-risk some of their portfolio. So we went over a lot right there. Hopefully that made some sense to you guys. Hopefully it's kind of getting more clear why I think AMC could rally and rally hard at that. And if the Fed comes out more dovish, that's a fundamental change. That's something different. That will impact the markets in dollar amounts. It's not just, a random situation that causes fear. It's a big impact to the market. So it could go either way. Honestly, the Fed might not see things like I see things logically. I mean, I also don't have, high expectations when it comes down to it. I have some money on it, but anything can happen. We've seen crazier shit happen. But that's my theory on it when it comes down to it. And I mean, on top of that, AMC just bought a gold mining company, 22% stake for $27.9 million that has 15 million ounces of gold deposits and $600 million ounces of silver. Altogether, that's $45 billion worth of precious metals they have. 22% stake of that, about $10 billion. I mean, it would take a while to get that kind of return on your $20 million capital, but it looks like a good risk to reward profile there. My take on that. Financial media won't tell you that, but that's my take. Now, as far as the data that you need to know for AMC, let's go ahead and take a look at the option flow sentiment. So the option flow sentiment, this is this is wild. This is just a joke. 33 orders totaling $4.92 million. Positive order value of a whopping 1%. Hedge funds are so desperate to artificially short AMC. They are trying their hardest to keep the stock down. Look at all of these 1450 puts that are coming in. It's all 14.50, 14, $15 puts expiring March 18th. Virtually this whole option flow sentiment list is March 18th. They're trying so hard to keep the stock down. There's orders in here that are worth millions of dollars. Millions in single orders on puts for a stock that's already fallen 75%. Where you get that logic from, I don't know. As far as the short interest of free float, 20.79%. Current shares that are sold short of 107.1 million. Cost to borrow max of 2.4%. Utilization is 100%. And the days to cover is sitting at 2.70. So not too much has actually changed there. The numbers have been very stagnant lately. Cost to borrow max is not going up, and the utilization is not changing. And I'm honestly kind of confused about that. I don't know what's going on with the data, if something is wrong there, but I think it should be updating to a certain extent, but we'll have to wait and see on that. The max pain is $20 by Friday. Again, kind of confirming a lot of what I'm saying here. Markets probably going to want to push the stock to 20. That's going to be the max pain for option holders. So that would be in that range that my price prediction was, in between $18.50 and $21 per share by the end of this week. Because you guys got to remember, this will be an explosive move. This will not be a move that you will be able to get into. You'll probably open up and the stock's up 9 or 10%. That's my thoughts on that. Like I said, could be wrong. My opinion there. As far as what is actually going to happen tomorrow, though, the report comes out at 2 p.m. So I don't really expect a big move tomorrow morning to the upside or the downside. It's going to be pretty muted as people are figuring out what they want to do, how they want to position their portfolios, what kind of bets they want to put on, for calls, puts, buying or selling, whatever the case is for that. But the report comes out at 2 p.m. You will see trading algorithms scan through it pretty much at like 2, like right as it comes out. Within a couple seconds, you'll see a move in the markets, a big one up or a big one down. But that's not going to be the final move, so don't panic into anything. The final move comes when Powell speaks and gives his press conference as well as his prepared statement. That is at 2:30, and that's going to be the big move. Now, as far as the technical analysis is actually concerned for AMC, like I said, that key level is $15. If we can break out above 15, which was our support level for a while, so I really don't think it's going to be too hard. We're very, very close to that. We closed at the higher end range of the day. Obviously, the stock rallied from about 2 p.m. till close, then I do think it'll be really good. Like I said, if we break out above 15, the first level we have to break out above is the 20-day simple moving average. That is at $16.89, and then the 50-day moving average is at $18. If we can break out of that, we'll likely go to that $18.50 range, in between $18.50 and $20 per share. So I don't really see a lot of resistance coming. As long as we can break out above 15, we should be smooth sailing. Remember, everything revolves around the Fed. Now, volume for the day was slightly higher than we have seen over the past week or so, with about 40.2 million shares that did trade hands, and obviously a very green day. The RSI did bounce off the dramatically oversold level. Now it's sitting at 38.70, still severely on the oversold side. The MACD is slightly bearish, but this could change in a drop of a dime. You don't see a wide gap here, so it's not super bearish, if that makes any level of sense. That is pretty much all for this video. That's what you guys need to know. That's the raw data. That's my opinion, and that's why I think AMC could go through a massive rally throughout this week. It all comes down to the Fed, but Russia-Ukraine, a potential ceasefire or peace talks, could be just as big as the Fed. Mix those two together, you could see a dramatic shift in attitude here. So I would be very nimble with your conviction, whether you think the market's going to rally or you think the market's going to drop. Be sensical about this. There's already a lot of fear that is priced into the markets. What will cause the markets to sell off is new information. If we get a chemical attack in Russia-Ukraine, looks unlikely at this current moment, markets would sell off. If we see a 50 basis point rate hike, markets would sell off. You have to see at this point very dramatic steps as far as escalation between the Fed or Russia and Ukraine to really see things sell off. Add China in there because they are now in that list as well. But I think you can expect something on the bullish side nonetheless. So that's going to be all for this video. Hit the like button, subscribe to the channel, as well as comment down below. Let me know your thoughts for the Fed meeting tomorrow. I would love to get your guys' opinions on that. Like the video, subscribe to the channel. I believe I just said that. Been a long day. I could not sleep last night. I had my daughter, and I don't know. I just could not sleep. But come join the trading community if you guys want to be a part of that. Thank you guys for watching. Come join us on the live stream later on tonight in between 10 p.m. and 11 p.m. Eastern Standard Time. Thank you guys for watching, and I will see you in the next one.